What if I told you that you could get $100,000 to $250,000 in funding without investors, without savings, and without risking your personal assets? You see, most people think that you need huge amounts of cash or rich investors to buy a business, but that's not true. This is exactly how entrepreneurs and business buyers secure six figures in funding to acquire profitable online businesses using a strategy called credit and personal loan stacking. And in this video, I'm going to break down step by step how to combine these two methods to get maximum capital, even if you're starting from scratch. And by the end of this video, you'll know exactly how to access six figures in funding to buy a profitable online business without waiting years to save up. You see, most people think that they need to save for years or that they need to raise money from investors to buy a business. They assume unless they have six figures in the bank, owning a profitable online business is out of reach. But that's not true. What if I told you that you could buy a cash flowing business today without using any of your own money? You see, this is where leverage comes in. Instead of draining your savings or waiting years to build up capital, you can use other people's money, specifically business credit and personal loans, to acquire a business that's already making money. This means that you're not gambling on a startup or an unproven idea. You're acquiring a business that already has revenue, customers, and profits. And this is exactly how smart entrepreneurs and business buyers acquire businesses faster and with less risk. Instead of waiting years to save up, they use strategic financing to own income-producing assets right away. So how do you actually get $100,000 to $250,000 in funding to buy an online business? Well, here's the secret. You don't rely on just one source of capital. Instead, we're going to combine two powerful funding strategies to maximize the amount of money that you can access without using your own personal savings. To get $100,000 to $250,000 in funding, this is where we're getting multiple credit cards, business cards, to create a large pool of revolving credit. And then we're going to use personal loan stacking. So this is where we're applying for multiple unsecured personal loans from banks and fintech lenders to get a lump sum of cash. With this combination, this allows you to acquire business faster with even more funding options and lower financial risk. You see, most people rely on just one funding method, like a bank loan, which can be hard to get and takes time to process. However, by combining business credit and personal loans, you can maximize approvals and access six figures in funding quickly. Here's why this strategy is so effective. With business credit, you get to access large credit lines without affecting your personal credit. And certain business credit cards don't report to your personal credit report. So you can access $50,000 to $150,000 in funding without increasing your personal debt to income ratio. Personal loans provide lump sum cash that you can use immediately for a business acquisition. Unlike business credit, personal loans deposit actual cash into your account, which you can then use as a down payment or to negotiate a better deal. And by stacking approvals from multiple sources, you can secure six figures in funding quickly. Applying for multiple business credit cards and personal loans at the same time increases your approval odds and total credit limit. This means that you can acquire a business that's already making money using strategic financing rather than spending years saving up capital. And so here's exactly how to get $50,000 to $150,000 in business credit through credit stacking. Now that you understand the two-part funding strategy, let's dive into the first step, getting $50,000 to $150,000 in business credit. And the best part is that you can do this with an existing LLC or even a brand new one. Banks don't require years of business history for credit approvals. It's all relying on your personal credit report. If your LLC is structured correctly, you can start getting high credit limits immediately. Before applying for business credit, you need to make sure that your LLC is set up the right way so banks are more likely to approve you for higher limits. You see, banks prefer lending to LLCs with proper structure. If you don't have an LLC yet, you can create one in states like Delaware, Wyoming, Florida, and Nevada. Existing LLCs can also qualify even if they never applied to credit before. Make sure your business looks credible. And so you want to have a business bank account set up. And once your LLC is properly structured, you're ready to start applying for 0% interest business credit cards. And not all business credit cards are created equal. The key here is to apply for high limit credit cards that offer 0% interest for 12 to 18 months. And here are the best business credit cards for stacking. Number one, Chase Inc. Business Preferred. This one provides 0% APR for 12 months on all purchases, and it has high approval limits, 10 to 50K plus, and it's ideal for new and existing LLCs. Number 2, Amex Blue Business Plus. 0% for 12 months, earn 2 times points, and also provides cash back. American Express is business friendly and allows you to stack multiple cards over time. Number 3, Bank of America Business Advantage. This one has 0% for 9 months, and it works well if you already have a business checking account with Bank of America. The approvals are typically based on personal credit score. Number 4, US Bank Business Platinum. This one has 0% APR for 18 months, one of the longest intro periods available. It has low fees and high approval odds for new businesses. By applying for multiple business credit cards, you can stack approvals and reach 50 to 150K in total business credit. And if you apply only for one card at a time, the banks may see the credit inquiries and may limit your chances of getting future approvals. So instead, apply for multiple business cards in the same 24 to 48 hour period so that the inquiries don't show up yet. This allows you to secure multiple high limit approvals before banks see your other applications. Once you've secured business credit, the next step is converting it into cash so you can use it to buy an online business. Here are 3 ways to turn business credit into cash without cash advance fees. Number 1, balance transfer checks. Some banks allow you to write a check to yourself and deposit those funds into a business bank account of your choice. Number 2, Plastique and Melio. These services let you use credit cards to pay invoices or even yourself, turning your credit into cash. And number 3, merchant cash out services. So if you have Stripe or even a PayPal account, you can process payments to yourself and withdraw the funds from there. And by using these strategies, you can access your business credit as cash, giving you the real capital to acquire a profitable online business. Now that you've secured 50 to 150,000 in business credit, the next step is stacking these personal loans to increase your total funding to 100,000 to 250,000. You see, personal loans are powerful because they provide lump sum cash, which you can use immediately for a business acquisition. Unlike business credit, which is revolving, personal loans give you fixed funding upfront, making them perfect for negotiating deals. The key to maximizing approvals is applying to multiple lenders at the same time and structuring your application strategically. You see, different lenders have different approval criteria, so applying to these multiple places increases your chances of getting higher loan amounts. Here are the best types of lenders to apply to. You have number 1, traditional banks. These are best for large amounts and low rates, and these banks tend to offer lower interest rates but require higher credit score. 700 plus is typically what they look for. Now, Wells Fargo is a good option. Citibank, US Bank is really good for really established personal credit history. Credit unions, these are best for flexible lending and higher approval odds, but they're a little bit higher interest rates. And then credit unions are a lot more lenient and better overall terms. Navy Federal Credit Union is great for military members and their families. PenFed Credit Union offers loans up to 50,000 with low interest rates. And then the local credit unions, many small credit unions don't report loan inquiries immediately, which can help with the stacking. And then we have fintech lenders. So these are best for quick approvals, and a lot of these provide pre-approvals that don't actually affect your credit score. SoFi is a great option, Upgrade, and many others. Many lenders provide pre-approvals with soft credit pools, meaning you can check your potential loan terms without affecting your credit score. So before applying, check if you qualify for pre-approvals with your bank or credit union. This allows you to see potential loan amounts and interest rates before committing to the application. Apply to multiple lenders on the same day so inquiries don't show up instantly. By doing this, you increase your chances of getting multiple loan approvals without hurting your credit. Once you've secured personal loans, combine them with your business credit to maximize your buying power. Use personal loans for upfront costs like deposits or down payments, and use business credit for ongoing expenses like marketing, operations, or inventory. You can negotiate seller finance to reduce the amount you need upfront. By structuring your funding correctly, you can buy a business with little to no money out of your pocket while keeping your financing costs low. Now that you've stacked 50 to 150K in business credit and 50K to 100K in personal loans, you now have about 100 to 250K in total funding. The next step is using the money strategically to buy a profitable online business. The goal isn't to just spend the money, it's to acquire a business that generates enough cash flow to cover your financing and still leave you with profit. Let's break this down step by step. Step 1. Find a profitable online business. There are 3 major platforms that you can use to buy established online businesses that are already making money. Number 1. Flippa. These are best for smaller deals and beginner-friendly businesses. Flippa has thousands of listings for content sites, e-commerce stores, and digital products and services. You can find businesses priced between $10,000 to $100,000, making it ideal if you're working with a lower budget. These are great for smaller acquisitions where you can use business credit alone to finance the deal. And then number 2, Empire Flippers. These are best for established businesses with a proven track record. Empire Flippers vets businesses before listing them, meaning the quality is higher than on Flippa. Most businesses here generate between $2 to $50K per month in profit. Businesses are priced between $50 to over $1 million plus, and you can use a mix of business credit and personal loans for funding. And next you have Acquire.com. These are best for SaaS and digital businesses. Acquire specializes in software businesses, subscription services, and just overall tech startups. Many businesses here are listed and have recurring revenue models, meaning they have predictable cash flow. But a lot of these are also startups that don't have any revenue. And then step 2, you want to negotiate seller financing to reduce your upfront costs. So let's say you have $250,000 and it doesn't cover the entire amount. One of the best strategies is to negotiate seller financing, which allows you to pay smaller amount upfront, as little as 20 to 30% of the total price, and use the business's profit to pay off the rest over time. This allows you to lower your risk by spreading out your payments over a period of time. For example, let's say you find a business listing for $150,000. Instead of paying $150K upfront, you can negotiate a deal where $50K is paid up front using business credit and personal loan funds, and the remaining $100,000 is paid over 24 months using the business's cash flow. This allows you to buy a larger business with less out-of-pocket capital. Step 3. Combine business credit and personal loan funds for low cash acquisition. Once you negotiated seller financing, you'll need to structure your funding in the most efficient way possible. Use personal loans for lump sum payments like deposits or initial down payments. Use business credit for operational costs like marketing, hiring, or scaling after you buy the business. If the business needs a little extra capital for growth, you can use your remaining funds to improve the operations and increase profits. The key here is to avoid over-leveraging yourself while still using OPM, other people's money, to acquire a cash flowing asset. And step 4, use the business's cash flow to pay off the funding before interest kicks in. Most of the 0% business credit cards have 6 to 18 months of no interest. This means you have time to use the business's revenue to start paying down the debt before any interest has actually occurred. So how this works in practice: you acquire a business that generates $10,000 a month in profit, and your monthly financing payments are $5,000 a month. You use the business's cash flow to cover the payments and keeping the remaining as profit. Within 12 to 18 months, you fully paid off the financing while still growing the business. By structuring your deal this way, you're letting the business itself cover the cost of the acquisition so that you don't have to. By stacking business credit and personal loans, you can get $100,000 to $250,000 in funding to buy an online business without investors and without waiting years to save up. Instead of starting from scratch, you're using strategic financing to acquire a cash-flowing business that can pay for itself while you're still making money. And the best part is that you don't need perfect credit. You don't need massive savings account or years of business experience to do this. If you want a step-by-step guide on which banks and lenders to apply to in the right order to maximize your approvals, drop a comment below and turn on notifications so you don't miss any of my new videos. See you on the next one.